FOMC, baby, FOMC. Can you handle it, baby? Can you handle the FOMC? I don't think you can. I don't think you can. Shout out to everybody here on the live. Thank you for jumping on in as we get into FOMC, the meeting that will change the world. No, really, I don't know. I made a trade here because we got above the 200 MA. I'm up 144, 13%. Can we handle it? It was a light trade. I didn't go too heavy. I said, you don't trade FMC. I mean, I always trade if we break the 200 MA. And we did. So I made the trade. Look, we actually hit the target there. Almost to the upside. Not too far away there. Shout out to everybody here in the live. So we're going to break down what happened to FOMC. The meeting just came in. We have the results of the meeting. We have the results of the meeting. We have the results of the meeting. And the rate has been cut. We knew the rate's been cut. All right? We know the rate's been cut. Okay? That we know. That we already know. The Fed rate. The Fed rate cut. What a day, right? They do this to us all the time. 4.5% was forecast. 4.5% is the actual. Previous was 4.75. It was cut by 0.25%. And there you have it. The rate was cut. That should be bullish for risk on assets. People should want to borrow more money and pump the stock market to the upside. Is that the case? I don't know, all of a sudden a nasty dump here. Look at this. Oh my gosh. Oh my gosh. Right when the rate cuts in, they're taken away by gains. Oh, I'm going to cover. I'm going to cover. I'm not going to lose. Look at that. We lost the 200 MA. I had to lose $12. I was up 140, maybe $180 at one point. Wow, look at them playing games with the 200 MA here on the 200 minute on the two. Oh my gosh. Now watch this. They might rip this back up again. The 200, baby. Don't get me tempted to get back in again. Don't get me too excited, Bitcoin. Because I just might do it. I just might do it again. It's like the same trade I was making like 2 hours ago, which is kind of crazy. And here we are battling the 200 MA up and down price action for Bitcoin. So, and I want to take a look at the S&P and see what happened to the S&P. TMAI looks like it's going to continue to pump here. Look at that curve. Anyway, maybe it doesn't. You know, we got airdropped it, so I own it. But who knows? But I like what I'm seeing there for TMAI. All right. And we're going to get into Jerome Powell. And I like when they ask him questions. I think it's hilarious. I don't know about you. I have a good time every single time we do this. So I'm excited. You should be too. We're right on the 200 MA here for Bitcoin. For whatever reason, really hugging it now. And honestly, I can't tell you how many times I've just longed right there. Right? So look, I'll take a long off that bounce. I'm also missing it. Dang, I'm missing it just open in the long. Let's see. Let me watch it for a second. Price action's really, really loopy. But again, a candle close above the 200 MA. One. Low stochastic. We should be able to hold that 200. I've seen this boom. I've seen a massive move after a shakeout. Same time, it's a shady day. I've been trading light today, as you can see. You can see all that craziness that just went on right now as I showed up. Thought I was going to have a nice long open. Everything was going to go well. No, not the case. Not the case there. Should have sold it there, but I was not at the computer. the computadore. All right. Can we hold above the TMAI here for Bitcoin? Nasty price action, and just wait for him to come out in the mask of questions. And it's likely, are we going to cut the rate again? That's kind of the next idea here. What's the next rate hike? And they're saying that they're going to cut it again. Actually, no, that's already set in stone. We have to wait. Let's go to the next meeting there, January 29th. All right. And that suggests that they won't cut the rate, huh? They're going to keep it the same. So they're saying that they maybe right now they're not going to cut the rate. They'll keep it flat at the current rate. Interesting. But that's just the beginning of time. We'll see what happens. Interesting, though. That's kind of bearish for whatever reason. And so it could be more about next meeting than this meeting. You see what I'm saying? Below the TMAI, I did not get in the trade, as you can see. Wow, they're toying with this price action here today. Let me show you what I see happening right now. You got yourself a symmetrical triangle, right? That could break up or down either way. Look how fast we did that, TA. That's insane. The quickest gun in the West. Anyway, move up, bringing it back to 106.3. Move down, we'll shred you down to 102.7. These mainly break to the downside, but you got a bit of a double bottom here. Seems like one 2E, a 1E, and a 2E. Let's do it correct there, but a bit of a double bottom there for Bitcoin. Interesting. We'll see. You know, most likely you're going to break to the downside and head lower, but you never know. All right, only time will tell. If you look at Bookmap, it has a lot of liquidity further to the downside than to the upside. It could go either way, but right now, if you really look at it, it has so much to the downside. All right, so it would have way more fun going all down here and liquidating everybody all the way down to 100,000 than going up there and tapping out. You know, but you never know. Anything is possible. It's not 100%. It's not set in stone. It's about 80% accurate, though. If you get more of liquidity below you, you usually go lower to take out the liquidity. It's just how it works. Okay? Yeah, this should be dumping, you know what I mean? Or if it's not dumping, you would think you would at least get you'd get some tight price action, then you would dump. So you're either dumping or getting tight and dumping. And there's the dump there to the downside. And look, you lost the 200 MA again. So what I see this is everyone thinking this was going to be something. And Bitcoin was just doing its own thing. Like, Bitcoin's cycle is so big right now, and it has its own money, and that what's happening through Bitcoin is playing out on its own. To me, I don't think really at the present moment FOMC has that much to do. I really firmly believe if we didn't have FOMC today, Bitcoin would have been doing all wacky things. Because think about it. Take away FOMC, Bitcoin would have been doing some wacky stuff. And people would have been acting pretty funny. What's it? I just hit 108. Did it? You know. So I take it with a grain of salt here, one step at a time, and I just look at the TA. Right? And I mean, this says you're going to break it down to 102.7. This says you have all the liquidity to the downside. You know, mainly when my TA and Bookmap line up together, we're spot on. So I don't know what to tell you, but that's what looks likely to me. All right. Thank you so much for that. Appreciate you. God bless to the new subscriber. Thank you for jumping on in our second live stream today with the Lifers. God bless each and every one of you for jumping on in and sharing your most precious asset with me, and that is your time. I did have a live trade going, and I wanted to cook with you, but when we lose the 200 MA, you know I bail. That's why I only lose $12 and not hundreds and hundreds of thousands of dollars, because look at that dump to the downside. My goodness. And they are flushing out the liquidation longs again, thinking people who thought they could get back in after the flush. And I'm teaching people right now in my trading school, and I'm talking about it all the time here. And I'm going to say it one more time. And again, some people are going to shun me and not like me for this. I day trade leverage, meaning I'm in and I'm out. Maybe a night, maybe 2 nights at the most. Very rare I'm in a leverage position too long. And you could say, but there's you could make big money leverage positions too. I mean, look, we crossed the 200 MA there. You just held that all morning from 99,000 all the way back up. I mean, on the 1 hour there. I mean, that's a beautiful trade. You crossed the 200 MA. Look, shoulder, head, right shoulder. My whole point, though, is I don't go and open up 10 leverage. When someone tells me an altcoin's hot, oh, I should have some Matic. They're like, oh, I'll open up a leverage trade for Matic and I'll open up. Like, they don't DCA. I DCA spot. I'm a spot buyer. I will be for most of my life. It's what made me all my money. It's what kept me away from all the shadiness. You know what I mean? People that just like had to, and all that crazy nonsense. And look, this thing is dumping. And look, it almost looks like a shoulder, a head, and a right shoulder here. Look at that. And there you have a head and shoulder pattern that wants to break further to the downside. I see 102.234 for bit of Bitcoin. And there she blows to the downside, losing the 200 SMA on the 15-minute time frame as well. The smooth, the SMMA, the smooth moving average. So I don't know if Jerome Powell is going to do much for this price action and change the sauce. Let's take a look at the S&P futures, ES1, and see, are we taking a massive dump here? Is the same thing happening? The E-mini futures, oh wow, yeah. Now S&P taking a nice dump to the downside, and again, flushing out liquidity. So the S&P having a nice little toasty dump. But again, as long as the S&P holds that 200 MA there, and I would say the 4-hour and the 2-hour time frame, we're okay, but we'll see. Is this a flush out on all major markets? Is this a liquidity grab? We'll see. This is likely to be up and down, up and down, up and down. You would see some up and down price action. Let's take a look at the NASDAQ. Is it lighter on the NASDAQ? Slightly lighter, but not as, you know. And look, remember I called this flag breaking out? And so far, so good. And again, you don't go straight up. You go up, you come down, you go up, you come down. This is natural. As long as the NASDAQ stays above 21,890, I wouldn't even really consider this much of a blip on the radar. If we lose that and we start to drop, then fine. I'll start to wake up and be like, okay, what's going on here? But it is a pullback. We have to pay attention. But to me, it's just business as usual in the markets. All right. Same for Bitcoin, as it's such a high area where we're sitting too. Let's take a look at the total market cap in all of cryptocurrency and see what's happening on the total market cap. I mean, still right now, if you look at it and you put it inside this channel, which I'm loving, McLovin. I mean, that looks great. Like, this looks like a day of fear. They could just flush people out. You know, a couple little dips, couple little wicks. 81 too. We're still in extreme greed. Like, they didn't really change the greed much. 81, I always just refresh just in case. And so look, there's a low, there's a higher high, there's a higher low. That's a macro uptrend. And so unless we were to take out this low here, we could come down and even make a double bottom. And then we'd probably be off to the races. Unless we took out this low and dropped, lost the 4-hour 200 MA and came down here, that's when I would be like, all right, we're in for a couple month pullback. Things aren't going to be, you know. So this could happen. And I'm open-minded to it, and we'll be watching for it. But right now, so far so good. If Bitcoin can hold these levels, or even just get a wick further down and up and recover off of 101.5 possibly. We're already at 103.7. $2,000 ain't that bad for Bitcoin at this point. Let's get this dump over with. Let's, you know, get to the key areas that matter. And if you open this up, I feel like we even have a little bit of leg to come down to, you know, somewhat about that area there too for BTC. So I'm not stressing too much here. Market structure still looks pretty good, and the trend is still our friend. There is a bearish div. I get it. We're dumping. But we got to take this low out for me, and then probably come back to $3 trillion. And even then, I mean, that would be a healthy pullback. But one step at a time here. Bitcoin struggling. Like no one's coming to save it. No one's buying in right now. No one's like, I got you, BTC. I got that big order for you. I'm going to make sure you don't dump. You'd have to say this is going to continue to the downside here, possibly. And they're going to continue to flush this puppy to 102,500. That's what this bear flag says is going to happen. You interact a little with the 21, boom, boom, ba-doom, boom, right? And we fall further to the downside. So, interesting. Well, a lot happening these days. We got drones. We got famous people under fire. It's amazing, huh? It seems like people are answering for their deeds. It's kind of weird, right? I don't know. You tell me, but it seems like something like the tides have turned somewhat in some way. Only time will tell, though. But this looks okay, you know. Total market cap. Let's take a look at the total 3 of all the altcoins. So that we had in a little flag. Really, the flag's still sideways. Still same idea. High, low. Did not make a higher high, though, like the total market cap did. Okay. Just, you know, something to put out there. Doesn't have to. I've seen these charts not do that in pump, but I'm still, you know. And again, do we go down? I don't want to be the bear, you know, the perma bull. I want to be open. I want you to watch this channel and realize that we could go either way. Anything could happen here. You see what I'm saying? Sorry, the music a little loud there. Apologize for that. I get a little excited before Powell comes out. You know what I mean? He gets the blood going. Powell, baby. No, but seriously, previous support is resistance there. And then we got some resistance at $1.13 trillion. Oversold in the stochastics RSI. 4 hour looks like we could be getting a bit of a bounce here on total 3. And, you know, as crazy as it is, when my finger doesn't slip there, and we don't go to tittle 3, we go to total 3. That was a Freudian slip there. No, so, I don't know how, I mean, I hope that's okay. So, look, I mean, there's a bit of a, I mean, it is a cup and handle. As violent as it was, right? So, does Total 3 respond with a big move to the upside? Next thing you know, all coins are ripping, and everyone's like, you were scared. No, you were scared. If it loses the 200 man in the 4 hour, that's when I would begin to, like, you know. Until then, even if we wicked down and we played some games, as long as we stayed above the 200 on the 4 hour time frame, I really wouldn't stress the run. We lose that area, and even if we did lose it, I mean, you know, but again, that could be the beginning of a bigger pullback. You don't want to lose this yellow line on total 3 on the 4 hour. All right? You write that down, take a picture of it. I don't know what you got to do, but that's really your line in the sand here. As long as you keep that, don't listen to any of the bears. Don't listen to anyone that tells you anything different. It's all nonsense. All right? And we are live. I don't know if anybody knows we're live. I forgot to post it in the group here. The newbies are like, oh, he goes live twice? Oh, yeah. Oh, yeah. So feel the love of the chat. Amen. 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 So let's get back in here. So the battle on the perpetual, that does look like a head and shoulder wants to dump. If we ever get back above the 2, I'll take a live trade again, but that's it. Very simple model. No games to be played. And you can see kind of the bigger picture, the smaller picture, and how we play it here. Interesting times. Almost time for Powell. We're getting close to Powell. And we're going to have, on the left screen, we have the beautiful book map. On the right screen, we're going to have the, 1 minute chart. And in the middle, we're going to have Powell. And I'll be hiding in the bottom. Nice and neat. Tucked away in the bottom of the screen there. But you'll see me. I'll be there. I'll be there with you. Did you pick up any of the dollars that I threw earlier? Did anybody get a 20? Anybody? Anybody? Anybody over here? Hey. Okay, FOM press conference December 18th. Let's go. Let's go. 2:30 Eastern Standard. Timmy. All right. So 1 minute time frame, 5 minute time frame, not looking good for BTC. Struggling in Dublin, right? And honestly, that looks like a bearish retest out of a little flag that's just going to take you down. Like, you look at that in the pump, I mean, that's a little flag that pumps. So you can see, I mean, I just caught that at the corner of my eye. I realized what I was looking at. I was like, oh man, that's a bear flag wanting to dump you to the downside. That takes you to 102,720, 740 area. And I mean, they say they want 1015. They want blood. They want blood at 1015, and that's it. And they're likely going to get it. So just be careful. Stops in place. Understand what's happening. Otherwise, you're a short baller, and you're riding these shorts of massive gains. Okay? Attempting to put in a bullish divvy, but that hasn't been working too much lately. Too well. You know, you're hoping for a rounded bottom. Try to end the pain, right? Inverted head and shoulders and get on out of there, but doesn't seem to be the case. And I don't see FOMC. Honestly, what only thing FOMC is going to do is like keep our minds off price action, give us something to watch. It's going to be like entertaining. You know? Interesting. The order book just kind of what it did is it got a little scarce. The middle was fuller. And it kind of got a little scarce, and then they built some more orders there. So a lot of people just took their trades off the board, decided they were going to get stopped out, so they closed their trades because there was a bunch more stop losses there that it's not there anymore. And then there's 1015, right? So people could be scared, and if the liquidity is not there, then we'll go back up. So if enough people take their trades down and they don't have the stop loss, they're back on now, see? Just like a vision issue there for a second. But yeah, just way more liquidity all the way to 1015. Attempting to bounce off the bullish divvy there, you can see it. But again, bullish divergence that doesn't work creates symmetrical triangles that usually don't. And that's just the case. I've been studying this for years. I watch how price action ebbs and flows and the ups and downs. Every 7 days a week, we watch the daily reversal at some point in the morning. I'm live every day with you guys. 7 in the morning in the trading group, 10 in the morning on the live stream. Could that make an inverted head and shoulder? That's your way out. Been buying out the altcoin spot with Bitcoin profits with 60K. Based on Bitcoin's valuation, it's a bull higher formation. I add to bag thoughts. I don't know, man. You do whatever makes you happy. Sounds like you're doing great, though. Shout out to Jason Clark. Yeah. Sammy, it's Sage. JP is my boyfriend. Thank you for being amazing. Love the unbearable cow and the hills of Malibu. Shout out to Sage. God bless you. Hope everything's going well with you and yours. Thanks for being amazing, love. The unbearable cow and the hills of Malibu. Amazing. Amazing. God bless you, Sage. Thank you so much for jumping on in and being here. Hope you're doing well. And hope everything's going well with you and yours. You're awesome. I'm just smiling about you right now, man. You're a trooper. You're a real one. I'd take you on a deserted island. And that sounds weird, right? It sounds like some Epstein stuff. I'd take you on a deserted island. But no, what I mean is if basically I had to assemble a crew of people and we were going to get deserted, you just look like someone that we could that would be great that would be, amazing. Like you'd be a survivor. You want to make the right, you always do. But God bless you, Sage. Thank you for being here. Hope everything's going well with you. I'm beginning to think, you probably like getting liquidated. Yeah, there's people that are addicted to the pain. For sure. Like you just do it over and over again. It becomes something that like, okay, I'm going to go give my money to the market today. How much are they going to give them? Okay, let me find out. Let me go to the ATM and get ready to just give my money away. I tell you what, man, people got to be careful. If you can't handle leverage trading and it keeps emptying your pockets, you got to stop. Please. Please. I say this every day. I did not make, the biggest trade of my life had nothing to do with leverage. It was just Bitcoin spot. Buying it when no one was paying attention and took 7-8 years of long-term accumulation, just believing in myself over time, and then things happen. So, like, I'd love to tell you that, I swung $100,000 and turned it into $1 million in a few weeks, and I'm the greatest thing since sliced bread, but that's just not how it happened for me. You know, I slowly built bags that over time that made it. And then I learned how to leverage trade, and then I used it to my advantage only when it was needed. And I found a little system that worked for me after studying it for a long time, and I only use it when I see my system. And if I don't see my system, I don't engage. And I try to teach my students this. So does Master Friend. We go out of our minds to create, you know, people that trade with consistency and discipline, but it's all about you, right? You got to want it more than I want it for yourself. And that just isn't always the case, apparently. Again, I hope you heard what I said. All right. And I'm not a financial advisor, so swing coming down and up. Interesting. I liquidate at least once a day. You're so funny. Sam, you give me so much inspiration. May God bless you, man. God bless you, Johnny. What happened with the meeting? Somebody said. I love the newbies. What happened with the meeting? Oh, the meeting's over. No meeting. What are you talking about? Yeah, there's no meeting. No, there's a meeting. The meeting happens very soon. The meeting really is between the FOMC, where they sit together and come out with the rate. They already kind of know, but they have a meeting, and that is the real meeting. And that did occur already, and that's when they came out with the rate. Now they drill Jerome Powell, and people ask him a bunch of questions, and some people try to make him feel good, and some people try to clown him. And depending on what news source they're from, and this is the fun part, all right? So get ready. In about 5 minutes, Jerome Powell comes on live. He's usually late. It might be 6. And we'll get ready to have this amazing live stream. Jerome Powell will be in the middle. Okay? This is how it's going to be. Bookmap will be on the right, like so. I have a beautiful chart waiting for us here of Bitcoin on the very small time frame. And I'll be doing my doodles here for BTC. Okay? Like we're doing here. And we'll be having some fun, okay? That's a really nice one. That's cute. Be careful though. Don't get hurt with socks in the house. That's the main reason kids fall. I love you, sweetie. I'm such a dad. All I see is danger. My kids show me stuff and all I see is things that could, you know, hey, don't do that, baby. You just don't want to see them get hurt. It's the last thing you want. So yeah, a bit of a bear flag there, but almost a slanted shoulder, head, and right shoulder. You know, possibly still an a possible trade up there. Still a chance. The FOMC just comes out. He says something that sparks something. Bitcoin cracks the 200 MA, 104, 105. Next thing you know, you're at 108 again, and you're like, how? We ripped through all-time high. You'd be surprised. I'm not saying that's guaranteed, but anything could happen. Shout out to Rave Song Records. They already had the meeting. Yeah, I do have a mentor in crypto. I pay for education and tools, but I didn't have... I would recommend Sammy, my bro here is the man you want to see. If you chase money, you'll stay broke. Chase the skill. Amen. Shout out to Clyde Martin. Amen. Sam, keep it up. You continue to submit your status of legendary. They will speak your name for decades to come. You truly show your divine inheritance. Don't make me cry, man, but God bless you, Zaddy Cheat. Sam, I show the group. Just follow the simple rule. Always use a stop. I'm profitable now. Even if I lose 3 to 4 in a row, I'm not wrecked. Amen. God bless you, Peter. You will find a way, my friend. Sammy, I need a Christmas gift. So does you don't need anything. God gave you everything you deserve. Everyone has everything they deserve. Nobody needs a thing. The word need was made by needy people. We're not needy people. We don't use that word. Amen? Amen. Bit of an inverted head and shoulder. This could be the way we get back in, or is it going to be a bearish retest to the downside? Doesn't matter to me because we're only long if we break the 200 MA, so it doesn't even matter, but we'll see. I mean, we could have more downside, so then the trade doesn't happen though. So, okay, here we go. FOMC getting very close. We're watching here with this inverted head and shoulder here for Bitcoin inside the flag. Can be ripped to the upside. This is what I'm looking at. Sorry, I was playing around and didn't notice. You didn't see it. I got chats all over me over here. I got the chat everywhere. A chat over there and a chat over here. Still looks like we're headed down to 102,700 for Bitcoin. Unless we can get back above a 200 MA on the 1 minute, it's the only way we survive here. I don't know why. That just is the case. That's how it is. And we are about to approach FOMC the best way you've ever seen it done. Nobody does it the way we do it. I'm telling you. We got it. We got it. And we bring the music down. Their music comes up. And it's a blast. What's a list of words you don't use? Need and don't use try, don't use need. Horrible 2 words. And want. Try, need, and want. 3 words that really don't have any need. Get it? Get it? No, I'm just saying. 3 words that don't have any use case, in my humble opinion, for a successful thought process. They hinder the mind, they create excuses, and they give you a pathway to say it's okay. When you say I try, you basically can tell someone that you're not going to do it, but you're going to do, you're like, when someone says, hey, will you wash my car next week? If your dad said, hey, son, will you wash my car? I'll try, Dad. Sure, I'll try. That means that, like, if you have time, you're going to get to it, but if you don't, then he can't yell at you for not doing it. It's a way of not being accountable. And when you're not accountable, you can create excuses. And when you create excuses, you can't take control of your life. And when you can't take control of your life, you can't manifest your reality. And when you can't manifest reality, you're not going to live in the reality in which you desire. And then you're going to be in a state of disease. And there goes the, the whole thing. There he is. We got him on tap.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of
He's a square.
employment
That's
and
what he
stable
said.
prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years.
I'm watching up here. If I make the trade, I'll let you know.
Has cooled from its formerly
Inverted head and shoulders should break to the upside.
Solid. Inflation has moved much closer to our 2% longer run goal. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal.
They're never going to get to 2%.
To that end, today,
I'm going to run on that.
Our Open Market Committee decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of about 2% over the next few years. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 173,000 per month over the past 3 months. The unemployment rate is higher than it was a year ago, but at 4.2% in November, it has remained low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than in 2019. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.2% at the end of this year and 4.3% over the next few years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in September. Thereafter, the median projection falls to our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market, while enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks.
He's like a bot today.
We're not on any preset course. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. On a technical note, we lowered the offering rate on our overnight reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Gina Smialik with the New York Times.
Gina.
Thank you for taking our questions. I wonder if you could talk a little bit about why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Well, so let me start by saying why we cut today and then move to 2025. So I would say today was a closer call.
Here we go.
But we decided it was the right call because we thought it was the best decision to foster achievement of both
human being
goals, maximum employment,
and the rest of us have to deal with it.
We see the risks as two-sided, move too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation.
So we're at the same time on today. It's kind of weird.
And on balance, we decided to go ahead with a further cut, and I'll give you some details on why. Downside risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further.
Dumping now.
So far, in a gradual and orderly way.
It looks like it's in a bear flag. It's below the 200 MA.
In the labor
103,000 coming
down to 2%. Job creation is now well below the level, or certainly below the level that would hold unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits, things like that, broadly show a much cooler labor market than we had in 2019. It's still quite gradually cooling. So we keep an eye on that. Inflation, we see that story as still
Michael
broadly on track.
Michael Coors,
I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. 12-month inflation has actually been moving sideways as we are lapping the very low readings of late last year. He likes to lap it up. Housing services inflation actually is steadily coming down now, albeit at a slower pace than we might like, but it has now come down substantially, and it is making progress slower than hoped. And we've had recent high readings from non-market services and some bumpiness for goods. So I'll just say, so remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace of further adjustments. You ask about 2025. I think
you don't say anything about it.
The slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just a general sense of what the committee thinks is likely to be appropriate.
Sorry, just one quick follow-up. Why, I guess, would you make those cuts? Like, what would be the trigger to cut?
So we're to cut further after this point. I would say it this way: we've reduced our policy rate now by 100 basis points. We're significantly closer to neutral. At 4.3% and change, we believe policy is still meaningfully restrictive. But as for additional cuts, we're going to be looking for further progress on inflation, as well as continued strength in the labor market. And as long as the economy and the labor market are solid, we can be cautious about as we consider further cuts. And all of that is reflected, to your question, in the December SEP, which shows a median forecast of down 2 cuts next year compared to 4 in September.
Howard Schneider with Reuters, and thanks for the opportunity to ask you a question. So this does seem similar to the dynamic in 2016 during the last transition to a Trump administration, where the committee saw slightly tighter policy, in part in expected anticipation of the fiscal policy stance that was seen evolving over the year. Some of it was a data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is
He's going to say nothing.
That there will be inflationary fiscal policy next year?
He's going to say nothing about fiscal policy.
I'd say
he's going to dodge that.
I'd point to 5 or 6 things, and let me start by saying that we think the economy is in a really good place, and we think policy is in a really good place. Let's remember that the economy is growing 2.5% this year, that inflation has come down by 50% from 5.6% to 2.6%. Headline inflation is 2.5% on a 12-month basis. We're actually in a really good starting place here. But since, so what's really driving the slower rate cut path? First thing is growth is stronger, right? The economy grew faster in the second half of 2024 so far than we had expected, and is expected to be above what our expectations in September next year as well. Unemployment is lower, and in the SEP you'll see that participants think that the downside risks are less and uncertainty is less. So that's more strength, right? Inflation is higher, as we talked about. Inflation's higher this year. It's also higher in the forecast next year. I'd also point out that we're closer to the neutral rate, which is another reason to be cautious about further moves. But then getting to your point, there's also there's uncertainty. Uncertainty around inflation, I pointed out, is actually higher. It's also in the case of some people, the way I would say it is this. Some people did
seems a bit lost in his words here.
Very preliminary step and start to incorporate
dancing on his toes.
Highly conditional estimates of economic effects of policies into their forecast at this meeting, and said so in the meeting. Some people said they didn't do so, and some people didn't say whether they did or not. So we have people making a bunch of different approaches to that. But some did identify policy uncertainty as one of the reasons for their writing down more uncertainty around inflation. The point about uncertainty is it's kind of common sense thinking that when the path is uncertain, you go a little bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down, and so that may have affected some of the people. But as I said, there's a range of approaches on the committee.
If I could follow up on that, you mentioned the risk and uncertainty indexes toward the back of the document. The upside risk to inflation jumped quite substantially. The only thing really that's happened, you mentioned that the disinflationary story remains intact, yet the risk weighting has jumped to the upside. The only real thing that's happened is November 5th in the meantime. Is it fair to say that that's what's driving the higher sense of upside risk on inflation?
Actually, that's not the only thing that's happened. What's happened is that our forecasts for inflation for this year,
are dropping to
103,000 higher than they were in September. So you had 2 months of higher inflation in September and October. As I mentioned, November is back on track. But once again, we've had a year-end projection for inflation, and it's kind of fallen apart as we've approached the end of the year. So that is certainly a large factor in people's thinking. I can tell you that might be the single biggest factor is inflation has once again underperformed relative to expectations. It's still, going to be between 2.5 and 3. It's way below where it was, but we really want to see progress on inflation. As I mentioned, as we think about further cuts, we're going to be looking for progress on inflation. We have been moving sideways on 12-month inflation as the 12-month window moves. That's in part because inflation was very, very low measured in the fourth quarter of 2023. Nonetheless, as we go forward, we're going to want to be seeing further progress on bringing inflation down and keeping a solid labor market.
Chris.
Thank you, Chris Rugaber at Associated Press. Thanks for taking the question.
Chris.
In September 2018, Fed staff in the Teal Book discussed the policy of looking through any new tariffs as long as there were one-time increases and inflation expectations remained anchored. Could you comment on if that analysis remains effective and any other thinking on tariffs generally that you can share?
So I do think that the September 2018 Teal Book alternative simulations are a good place to start. I happen to have brought them here with me today. I'm sure you have them too. They're a good starting point. And
there's the dump. These mainly dump to the downside, especially when you're below the 21. See, there we go, 103,000.
The right questions.
All that moved down there. I mean, it could go on either way, but it's when you can't break the 200 MA, you don't go long. Shoulder, head, right shoulder there to the downside.
And I'd point you. There's some language in the see-through paragraph that says, that considers situations in which it might be appropriate to see through inflation, and then name some conditions that in which it might not be. In any case, this is not a question that's in front of us right now. We won't face that question. We don't know when we'll face that question. What the committee's doing now is discussing pathways and understanding, again, the ways in which tariff-driven inflation can affect tariffs can affect inflation in the economy and how to think about that. So we've done a good bit of work. All of us have, each of us has, and it puts us in position when we finally do see what the actual policies are to make a more careful, thoughtful assessment.
You can see the shoulder,
might be the appropriate policy
the
response.
head, the right shoulder, bearish retest of the channel.
Given the recent bout of inflation that we've been through, with consumers seeing how prices can
that
rise,
almost looks like the tie I have on.
Seeing that they can raise prices at least for some time, does that make it a little bit riskier to look through tariffs? I mean, do you feel you have to respond more quickly to inflation threats, given what we've seen in the past few years?
So the main thing is, and this is also a point in these alternative simulations, is there are just many factors that go
simulations.
into how much tariffs will even go into consumer inflation.
Look, shoulder, head, right
how
shoulder.
persistent will that be?
So simple to see.
So we just don't know really very much at all about the actual policies. So it's very premature to try to make any kind of conclusion. We don't know what will be tariffed from what countries, for how long, in what size. We don't know whether there'll be retaliatory tariffs. We don't know what the transmission of any of that will be into consumer prices. To your point as well, I wouldn't say that we know whether the last episode is or is not a good model for what happened. You pointed out we've just been through a period of high inflation. We've just gotten through that period. That's a difference. There was also quite a bit of diversion of trade away from China to other countries since that. That may have effects. I don't know. I just think we need to take our time, not rush, and make a very careful assessment, but only when we've actually seen what the policies are and how they're implemented. And we're just not at that stage. We're at the stage of doing what
you just hit the target there at 103,047 to the wick.
But not trying to get to.
We hit it exactly. Look at that.
For some time.
Exactly where we went. Isn't that crazy?
Nick Timmeros of the Wall Street Journal.
Sure, Powell.
Make sure I understand. Participants today revised up their core PCE inflation projection for 25, so that the central tendency runs from 2.5% to 2.7%. And as Howard noted earlier, most of the committee sees the risks to those projections to the upside. So if inflation only declines next year from 2.8 to 2.5 to 2.7, what would compel the committee to be cutting in that situation?
Let me find these numbers. So we have inflation coming down, core inflation coming down to 2.5 next year. That'd be significant progress. You see a slower path. I think that does take on board that we want to see real progress, but we'd be seeing meaningful progress to get inflation down to that level. That wouldn't be all the way to 2%, but that would be better than this year. This year will be 2.8 or 2.9. That would be meaningful. We also have to think about the labor market, and while we have the labor market forecast as being in good shape, we are also mindful that it is still out there very gradually cooling, so far in an orderly, gradual way. But it's also something we need to keep our eye on.
I guess if I could follow up, if somebody looked at these projections and also the insertion of the extended timing language in the statement, which has been used at times in the past when the committee thinks maybe it's going to be on hold for a while, and they said, gee, this looks like it could be the last rate cut for some time, would they be mistaken to infer that?
So that's not any decision that we made at all. Let me explain extent and timing. So the sense of that wording is to make clear that if the economy does evolve about as anticipated, we're at a point at which it would be appropriate to slow the pace of rate cuts. So extent, that just relates to how much further we can reduce our policy rate consistent with getting to a neutral stance. Clearly, that distance has shrunk by 100 basis points. So it's significantly smaller. So that's the extent question. And we're going to be looking for further progress on inflation as well as a strong labor market to make those cuts. Timing just suggests, again, that we're at a place where we assuming the economy develops as expected, we're at or near a level that will make it appropriate to slow the pace of adjustment. So that's what we mean by that. We're not trying to make decisions about the longer run. plan. We're trying to make sensible policy as we go, and I just would emphasize the uncertainty, which is it's just a function of the fact that we expect significant policy changes. There's nothing really unusual about that. I think we need to see what they are and see what the effects they will have. We'll have a much clearer picture, I think, when that happens.
Mike.
Michael McKee from Bloomberg Radio and Television.
Mikey McKee.
Even though you've cut rates by 100 basis points this year, we haven't seen much change in mortgages, auto loan rates, or credit card rates. You say you're significantly restrictive. Are you running a risk that the markets are fighting against you and the economy could be more at risk of a slowdown than you anticipate?
So,
Mike always gives it to him hard.
Sorry, the rates that you talked about
always goes
are
out
really
hard.
longer run
Always.
rates, and they are affected to some extent by Fed policy, but they're also affected by many other things. And longer rates have actually gone up quite a bit since September, as you well know, and those are the things that drive, for example, mortgage rates more than short-term rates do. So we look at that, but we look at all financial conditions, and then we look at what's happening in the economy. So what we see happening in the economy, again, is, most forecasters have been calling for a slowdown in growth for a very long time, and it keeps not happening. So we're now well into another year of growth that looks like it might be 2.5%. Second and third quarters were right about at the same level. So the U.S. economy is just performing very, very well, substantially better than our global peer group. And there's no reason to think a downturn is any more likely than it usually is. So the outlook is pretty bright for our economy. We have to stay on task, though, and continue to have restrictive policy so that we can get inflation down to 2%. We're also going to be looking out for the labor market. We want to keep the labor market pretty close to where it is. We're pretty close to estimates of the natural rate of unemployment. Job creation is a little below the level that would keep it there, but nonetheless close. And so that's what our policy is trying to achieve.
If I could follow up by asking about
Bear
your
flag.
formulation for beginning
102,400
incled the phrase
we want to dump for
have
book count.
confidence that inflation
It's a dumpy kind of day, my friends.
Our target. Given the fact that you've raised your forecast for next year, do you have confidence or are you uncertain about the path of inflation going forward?
So confidence was our test for raising rates, and we made look at the broader sweep. We've made just a great deal of progress. We're well into the twos in core inflation, and around 2.5 or even lower than that we have been for headline inflation. So I would say I'm confident that inflation has come down a great deal, and I'm confident in the story about why it's come down and why that portends well. And I'll tell you why. Again, you do see with housing services inflation, which is one that we've really worried about, it really has come down now quite steadily at a slower pace than we thought 2 years ago, but it's nonetheless steadily coming down as market rents start to equilibrate better with new leases that turn over, not new tenants, but new leases. Market rents is new leases. So that's happening. That process is ongoing pretty much as we expect. Goods inflation, which is another big piece of it, has returned right to the range where it was before the pandemic. Just for some months this year, it kind of moved up in a bumpy way because of used cars and things like that. But we think overall that should generally be in the range it was in. That leaves non-housing services, and market-based non-housing services are in good shape. It's non-market services, and those are services that are imputed rather than measured directly, and they don't. We think they don't really tell us much about the about tightness in the economy. They don't really reflect that. A good example is financial services, which is really done off of asset prices, and that's how that inflation works. So the overall picture, the story of why inflation should be coming down, is still intact. In particular, the labor labor market. Look at the labor market. It is cooler by so many measures now, modestly cooler than it was in 2019, a year when inflation was well under 2%. So it's not a source of inflationary pressures. Not to say there aren't regional and particular professions where labor is tight, but overall, you're not getting inflationary impulses of any significance from the labor market. So what's the story? The story is still just we're unwinding from these large shocks that the economy got in 2021 and 22 in, for example, housing services, and now also in insurance in particular, where costs went up, and those are now being reflected later in housing insurance. It's real inflation, but it doesn't portend persistently high inflation. So we and most other forecasters still feel that we're on track to,
I see it coming down to 102.4%.
It might take another year or two from here, but I'm confident that that's the path we're on, and our policy will do everything it can to assure that that is the case.
Colby. Thank you. Colby Smith with the Financial Times. So the unemployment rate as of November, while still very low, is within spitting distance of the level that generated a lot of concern about the labor market over the summer in the lead up to the 50 basis point cut in September. Hiring has also narrowed to just a handful of sectors. But now the committee appears comfortable skipping cuts at upcoming meetings. So what has changed about the committee's assessment of the risks confronting the labor market? Is there just less concern now on that front, or is it just about there being more upside risk to inflation that now needs to be accounted for?
The unemployment rate is now the same as it was in July, 4.2%. It's moved up and down, but it's now the same as July. And job creation is lower than it has been, but it's been steady. It's not declining. It's steady at a level which, as I pointed out a couple of times, is actually below the level that would hold the unemployment rate constant, but it's not so far below. So you might if we have the break-even level right, and if job creation continues at that level in the establishment survey, then you would get a tenth maybe every other month kind of thing. So gradually declining. We don't have that kind of precision in this. So you're right, though, and I read out some of the reasons. We do think the labor market is still cooling by many measures, and we're watching that closely. It's not cooling in a quick or in a way that really raises concerns. I think, you pointed out, participants in the FOMC really thought that the risks and uncertainty had improved relative to the labor market. And it's because things have just gotten a little bit better. It doesn't, the unemployment rate flat and things like that. Nonetheless, we're watching it closely.
If the idea, though, is that no additional kind of softening in the labor market is welcome here, what's to prevent that from happening if rates are still restrictive?
So what I said is we don't think we need further softening to get to 2% inflation. That's what I'm saying. Not that it's not welcome. We don't need it, we don't think. If you had a situation where inflation is moving around by a tenth every few months, that's, we'd have to weigh that against the fact that inflation has, in recent months, been moving sideways in the 12-month window. And so we've got to weigh them both. And at this point, for a while there, we were only really focused.
See, we're dumping down to 102.4
on inflation. We've now
on the right side here. We got in the bear flag.
Where the risks to
we
the
fell at this flag and then another bear flag.
Roughly in balance.
Continue to drop.
And so that's how we think about it.
Steve.
I see this bigger head and shoulder down to 97.9.
Mr. Chairman, I did not hear you use the word recalibration today. And I'm just wondering if the recalibration phase is over and what you might call this new phase and whether the criteria for changing rates is somehow different and higher than it was before. Thanks.
We're not renaming the phase yet, but we may get around to that. But no, I would say we are, though, in a new phase in the process, as I said. So, and that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation. We've done a lot to support economic activity by cutting 100 basis points, and That's a good thing. I think I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation, and that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
I wonder if I could follow up and ask you how much you or the committee are looking through some of the high numbers we've had in the recent inflation numbers. For example,
thank you.
Cars being up maybe because of the hurricanes, eggs because of the avian flu.
There we go, 1024, exactly what I'm telling you we're going.
Looking forward perhaps to housing.
Showed you this bear flag to the downside here, to 1024.
Yeah, I mean, we always try to be careful about not throwing out the numbers we don't like. You know, it's just an occupational hazard is to look, oh, those high months are wrong. What about the low months? You know, we have a very low month potentially in November. You know, it's estimated by many to be in the mid-teens for core PCE. So that could be idiosyncratically low. We try to look at not just a couple or 3 months. We shouldn't have our position shouldn't change based on 2 or 3 months of good or bad.
There's
data.
target hit right there, 1024.
Now of inflation coming down gradually over time. As I mentioned,
that was the length of this poll.
I think it's 12-month headlines 2.5, 12-month core is 2.8. That's way better than we were. We still have some work to do, though, is how we're looking at it, and we need policy to remain restrictive. To 1 minute just dumping hard,
like you can't even find a flag, nothing. Like it's just straight dumpage. Straight
Thanks,
leverage
Chair.
flush out again.
Chair Powell, Neil Irwin from Axios. Financial markets have been very buoyant really all year. Is the committee comfortable with where financial conditions are, or do you see a risk that looseness in financial conditions could undermine progress on your inflation target?
So we do look carefully at financial conditions, of course. That's part of what we do. But, you know, we really look carefully at is the performance of our goal variables and how are we affecting the economy. So what we've seen over the course of just take the last year, we've seen inflation, over the last couple of years, come down a lot. We've seen the labor market cool off quite a bit. That suggests that our policy is restrictive. We can also look more directly at the parts of the economy that are affected by that are interest sensitive, like particularly housing. Housing activity is very low, and that's partly significantly because of our policy. So we think our policy is working, it's transmitting, and it's having the effects on our goal variables that we would want. You know, a lot of things move financial conditions around, as you know, and we don't really control those. But I'd say we see the effects we're hoping to see on the goal variables and the places where we'd expect to see it.
So if I may, speaking of assets that have been buoyant, do you see any value or benefit in the U.S. government building a reserve of Bitcoin?
Okay.
So
here we go.
You know, we
came up, baby.
We're not allowed to own Bitcoin. The Federal Reserve Act says what we can own, and we're not looking for a law change. That's the kind of thing for Congress to consider, but we are not looking for a law change.
You're not part of the government. You're a private entity.
Andrew.
Hey, happy holidays, Mr. Chairman. Thanks for taking our questions. I was wondering if you are satisfied with the way 2024 is ending, if you're confident that we've avoided the recession that forecasters were predicting as inevitable a couple years ago.
I think it's pretty clear we've avoided a recession. I think growth this year has been solid. It really has. PDFP, private domestic final purchases, which we think is the best indicator of private demand, is looking to come in around 3% this year. This is a really good number. Again, the U.S. economy has just been remarkable, and it's when in these international meetings that I attend, this has been the story, is that how well the U.S. is doing. And if you look around the world, there's just a lot of slow growth and continued struggle with inflation. So I feel very good about where the economy is and the performance of the economy, and we want to keep that going.
The other thing I just wanted to ask about was the you guys have noted that the unemployment rate is still low. However, employment rates have fallen rather quickly. The prime age employment rate has fell by about half a percent rather recently. The question, I guess, is do you think there's maybe more downside momentum in the labor market than the unemployment rate alone is signaling?
I don't think so, no. I think overall, if you look at it, prime age participation is still very high. What's going on in the labor market is that the hiring rate is low. So if you have a job, you're doing very well, and layoffs are very low, right? So people are not losing their jobs in large numbers, unusually large numbers. If you are
nasty dump, 102,000. Look all the way,
low, and that's a signal.
It's just a meltdown, complete meltdown. Look at this, just insanity.
Look for signs like
there's no reason for it. It's nothing to do with the rates.
A sign of softening.
This is just Bitcoin doing its thing, everybody. This has nothing.
I think you
this
can
is like
see an ongoing gradual softening in the labor market. Again, not something.
Look, I showed you this head and shoulder is about to start coming down, and it is tumbling.
You know, that's part of the reason.
Looks like we may go all the way to 97.9 that fast. I don't know.
With the action, with an additional cut.
But that is just an absolute.
You take a step back. The level
just head and shoulder neckline break to the downside. I could see it happening before it happened there.
At a healthy and ever more sustainable.
101,500. This is a dump of dumps.
So the labor market. This is a good labor market, and we want to keep.
Again, losing the tutor demand, the 5 created the dump.
Amira.
This is disgusting.
Thank you,
A
Amira.
nasty dump for Bitcoin.
I just want to put a finer point on the labor market.
Sorry to talk over this.
Keep the labor market this way in the strong position that you have described without further cuts. In other words, do you still view the labor market as needing support to protect against a further cooling?
We can't know that with any tremendous certainty. I will say that we think that our policy balances the risks. We think the risks are roughly in balance as between the two mandates, and we think the labor market is in solid shape. And when I say it's softening or cooling, it's a very gradual process. Job creations are meaningfully positive. Wages are, if anything, still a bit above what would be sustainable if productivity were to revert to its longer run trend. If you take into account the high productivity readings we've had, then wages are already at a sustainable level relative to 2% inflation. So I don't want to overstate the downside in the labor market, because the downsides clearly appear to have diminished. Nonetheless, it's one of our mandate goals, and we pay close attention to it, and it's worth noting that it is still gradually cooling, gradually and in an orderly way, and that's how I would characterize it, and that's why we're paying careful attention.
Elizabeth.
Thanks so much, Chair Powell. Elizabeth Schulze from ABC News. As you've noted, the Fed is now forecasting higher inflation next year. High prices are still a burden for so many households right now. Why do you think it is that inflation is proving to be more stubborn than you'd expected?
It breaks down into a long answer if you want, but it just has been a little bit more stubborn. I think if you go back 2 or 3 years, many people were saying that to get this far down, we would have had to have had a deep recession and high unemployment by now. Well, that has not been the case. So, the path down has actually been much better than many predicted. We've managed to have the unemployment rate remain essentially at its longer run natural rate, while inflation has come down from, core PCE inflation has come down from 5.6% to 2.8% on a 12-month basis. So that's a pretty good outcome. Why hasn't it come down? One reason is that just a technical issue around the way we calculate housing services, and that process has been slower than market rents are showing up more slowly in that measure than we might have thought 2 years ago. So that's part of it. I think there are other parts of the story, but what I think people are feeling right now is the effect of high prices, not high inflation. So we understand very well that prices went up by a great deal, and people really feel that, and it's prices of food and transportation and heating your home and things like that. So there's tremendous pain in that burst of inflation that was very global. This was everywhere in all the advanced economies at the same time. So now we have inflation itself is way down.
A lot of talk at this time.
People are still feeling high prices.
Got a nice bounce off of
that is really what people
100,800.
can do for them.
Bitcoin got a huge bounce here back to the upside.
Is to get inflation
insanity. Look at this
target and keep it there.
So if you were short and you didn't get out quick enough, or if you shorted late, you got rocked.
So that they're
and now look, they're sending the price all the way back up again.
Compensation is going going up faster than inflation year upon year upon year, and that's what will restore
back to 102,300.
people's good feeling about the economy. That's what it will take, and that's what we're aiming for.
And as we look ahead to next year,
he talks so much this time.
The biggest challenge to the economy under the next administration?
I feel very good about where the economy is. Honestly, I'm very optimistic about the economy, and we're in a really good place. Our policy's in a really good place. I expect another good year next year.
Edward.
Thanks, Chair Powell, for doing the questions. Edward Lawrence from Fox Business. So you say that we're closer to the neutral rate. What percent do you see and the committee believes, where is that neutral rate?
So I'll say a couple of things. First of all, when we...
what are you talking about when you're talking about it?
In the summary of economic projections...
What are you talking about when you're talking about it?
Which is the neutral
What are you saying over here?
At a time when supply and demand are in balance, the full economy is in balance, and no shocks are hitting the economy. That is not where we are right now. So when we're making monetary policy at the Fed, that's not the question we're asking.
Nasty dump here for Bitcoin.
Read between those longer run numbers that we write down and what we think the appropriate policy should be. So basically, at any given time, various shocks are hitting the economy. And so what we're doing in real time is we're looking at our policy stance and we're looking at the way it's hitting the economy. And particularly, we look at the effects it's having as we try to move the economy toward maximum employment and price stability. And the answer can be there are things that affect the economy that are lasting but not permanent. And the ones that are permanent are the ones that would be in our star. The ones that could be lasting but nonetheless go away over time, they could actually affect what's sort of technically the appropriate neutral stance in near term. So we're looking at that, and we don't know exactly where it is, but as I like to say, we know it by its works. And I think what we know for sure is that we're 100 basis points closer to it right now. There are many estimates of where that might be, and we know we're a lot closer to it, and I think we're in a good place, but I think from here, it's a new phase, and we're going to be, cautious about further cuts.
But I think that the markets are looking for a little more clarity. I mean, I've heard estimates from 2.9% to 4%. I think the markets would like to see a little more clarity about a year out, 18 months out, as to where that goalpost, for lack of a better term, is, because at the moment it looks big.
Yeah, I mean, honestly,
he's not going to give you that, man. If he knew, he wouldn't be doing
countless models of what a neutral rate might be at any given time. There are empirical models, there are theoretical models, there are things that combine them, and they have as many different answers as you'd like. So there is no real certainty, and I mean, it's actually a good thing to know that we don't know exactly where it is. So you're not tempted to think, oh, I think this model or this estimate is right. You just have to be open to the empirical data that are coming in and also how it's affecting the outlook. And it's not made any easier by the fact that, that our policy works with long and variable lags. Nonetheless, that is the job we have. And so I think it's appropriate for us now to proceed cautiously now that we're 100 basis points closer to neutral. And,
sometimes, but
we'll do so. Meanwhile, the economy seems to be in good shape.
Back above 102 with some bullish support. I don't know, man. Not even
the labor market, while we can still make progress on inflation because policy is still
not even bullish divergence.
Victoria.
Hi, Victoria Guido with Politico.
Victoria.
I just wanted to make sure I understood what you were saying at the beginning about inflation. Are you saying that progress on core PCE counts as progress on inflation, even if headline inflation ticks up? And then also, since that's what's projected in the SEP,
she's like, you don't make any sense.
What accounts for that? Why do you all see core PCE going down and potentially headline inflation ticking up?
So, and as I imagine the goal overall is headline inflation because that's what people experience. People don't experience core inflation, they experience inflation, and that includes food and energy costs. So that's the overall goal. But, as we know, headline inflation contains energy and food, and those prices can fluctuate for reasons that are not related to tightness in the economy and therefore are not really good predictors of future inflation. So it turns out that core inflation is a better predictor of overall inflation than overall inflation is. So we look at core inflation because it's a better measure of what future inflation is likely to be because it's a better measure of what inflation pressures exist. So it's complicated, but ultimately ultimately, our goal is headline, not core. So your second question was what?
Why do you all see core going down, but headline potentially ticking up?
So headline can be affected. You're talking about next year.
Mm-hmm. I see more downside, everybody, possibly to 100,000, 98 possibly.
Food prices. So that there will be things in the headline forecast that are to do with forecasts of energy prices, whereas core will be, if you look at core going out a full year, then it'll be much more driven by things like tightness in the economy. So that's why the two can go in different directions. Headline has been lower, as you know, most of this year, but that's because energy prices have been coming down, which is a great thing for people, but energy prices will come down and then they will go up, and it won't really be telling us anything about how tight the economy is and how future inflation will perform.
Do geopolitical risks factor in at all to how you're thinking about energy prices?
So we monitor geopolitical risks really quickly, but really carefully rather. But I would say so far those risks haven't really. Nothing has come out of those risks that has really been important.
Tended to double bottom off of 101,200 here for Bitcoin.
The price of oil, given that we're talking about the Middle East and Ukraine, but that is a good summary statistic for the kind of thing that could go wrong with global turmoil. But the price of oil has been coming down, and because of supply conditions, global supply conditions. So the U.S. is not feeling really the effects of geopolitical turmoil, but we are certainly at a time of elevated geopolitical turmoil, and it remains a risk.
Kelly.
Thanks, Chair Powell. Kelly O'Grady from CBS News. I want to go back to something that you said a minute ago, that wage growth is outpacing inflation now. It wasn't the case for some time, of course. It's partly why Americans haven't felt much relief in their wallets from prices yet. But with inflation ticking up, how worried are you the progress in closing that gap could go away?
Yeah, so inflation, again, we don't overreact to a couple of months of higher readings or a couple of months of lower readings. And what we had was we had 4 months of really nice readings, and then September and October were higher, but then November is much lower. So I don't really think the public is experiencing that as a surprising upside risk to inflation. I think inflation is much lower. What the public is feeling, and they're right about it, is that prices are just, the price level went up because of the past inflation. And it's going to take some time for real wages to recover over a period of years in which your real compensation is growing. And in other words, your compensation is growing meaningfully faster than inflation. That's exactly the kind of economy we have now, and we just want to hold on to it. That process will probably take some years, but that's what's going on.
Now they want to take us to 96,000, 98,000. I see 98K.
A couple of months of higher inflation.
I tell you, this is the measured move of the head and shoulder
of the nature you're suggesting.
Takes you to $98,000.
Let's look more long term. You previously predicted hitting the 2% inflation target in 2026.
Can we double bottom here?
2027. You said you're focused on enabling further progress on inflation. That's not necessarily progress in the right direction. Are you confident that target isn't going to move further out?
We're talking about when you're projecting the economy, 3 years out, 2 years out, you're talking about high uncertainty, very high uncertainty. We really, at that point.
But they make decisions on that high uncertainty.
It's not possible to confidently predict where the economy is going to be in 3 years. So what we're doing is we're looking at what's happening now, and we're kind of projecting that the same kinds of things are happening. So we keep a strong labor market, housing services inflation comes down, goods inflation settles down, and non-market services return to their prior level. All of those things should happen over time, and those pieces come together. There's every reason to think that they will. The timing of it is highly uncertain. But you're not wrong though that it's been a bit frustrating because while we've made progress, it has been slower than we had hoped. Nonetheless, we're still on track, and I think if 2 years ago you'd said we were at 4.2% unemployment and 2.8% inflation, people would say, "I'll take that." I mean, that's a pretty good interim place to be. Job's not done, but I think we're feeling good about where we are and where we're headed.
Ohio proposes state Bitcoin reserve. Some bullish news. we're getting pummeled.
Hi, Chair Powell, Nancy Marshall-Genzer from Marketplace. You said a couple times inflation has been moving sideways, appears to be settling in around, 2.5%. Do you think the Fed is just going to have to settle for that and accept that you're not going to get to your 2% target?
No, we're not going to settle for that. I think we certainly have every intention and expectations that we'll get inflation back sustainably to 2%. That is, and I am confident we will achieve that. It has taken longer, but you have to be, we are making progress. We have made a great deal of progress, and we'll continue to do so and get back to 2% inflation. That's what we owe the public, and we're committed to achieving it.
In that case, can you rule out a rate hike next year?
You don't rule things completely in or out in this world. That doesn't appear to be a likely outcome. I think we're at 4.3%. That's meaningfully restrictive, and I think it's a well-calibrated rate for us to continue to make progress on inflation while keeping a strong labor market. So, thank you very much.
Not many good answers there. Just a massive dump for Bitcoin. Leaves us all in shambles. And honestly, that had nothing to do with BTC. I find they were kind of uncorrelated. Call me crazy, and let's kind of get to the drawing board here with Bitcoin. Total losing that key level, dropping to the 4-hour TMAI. I said if we lose that would be sketchy on the live, and we dipped right to it. Losing the $1 trillion market cap for the altcoins. Altcoins taking a pump back and a dump, and now it looks like altcoins, after this beautiful run to the upside, maybe on a trajectory further to the downside. Wow. I'm just as taken aback as you. It takes me a moment. I'm an analyzer. I can see it all, but it doesn't mean it doesn't still affect me when I see it happen. It's like, wow, what are you doing to us? So let's take a look here at BTC. Let's break down the bigger and the smaller time frames. Let's do our top-down analysis and kind of get ready for what I see happening on the week ahead, right? I mean, unbelievable what just occurred, though. I am like, wow. It's like they take your soul and just, I swear, trading just takes your soul and steps on it, man. I can't explain it, but. So this weekly will close red, all right, with a beautiful high at 108,000. The high actually on that was 108,353. If that closes red, though, that will be bearish. It doesn't mean it will. We still have 4 days and 4 hours. We could close green. We could be at 110,000, 112 by the end of the week. You never know. We got to stay open-minded. But right now, if that closes red, you would assume we would get a bigger pullback here for Bitcoin. We do see this $97,000 200 support on the weekly. And right there, you got a little bit of support right now on the weekly. So, until the candle closes below 101,700, all right, we whip to it, but we have bounced back up, but we'll see. 101.7, I mean, it looks like we're about to be there right now. Yeah, as I said that, we lost. Wait, no, that's 100,000. So yeah, there's a little support at $101,100, but right now it just looks like there's more downside here for Bitcoin. And I got that giant head and shoulder that I was pointing out to each and every one of you during the live stream, where the measured moved down to 97,988, and it just seemed like it started to tear off right after I posted it to the downside. If you want to look at what I have cooking there on that 1 minute time frame that I already got right here, you can see we have this, symmetrical triangle. These mainly dump, and that says we're going to go lower to about 99,900. Then we lose 100K, and it's kind of sad, right? It's like, what? What do you mean? We were just, But that's how they usually play this market, and you never know what can happen. You never know. They tell you it's going to be the biggest season ever. They tell you to hold on. You listen to Twitter. I tell you right now, I'm so open-minded, and I take it one day at a time because I'm so sick of listening to 1,000 people tell me the market was going to pump, and it never did. So one step at a time, everybody. Don't listen to these people. The crypto Twitter people, the people that just egg you on, the cheerleaders, the KOLs that just want to keep pushing and selling. My Discord is a trading group. We teach you how to trade, man. We don't really show, it's like I find coins and I deep dive, but we don't show coins. Like, it doesn't matter whether you get into a coin or not. I'd love if you find life-changing wealth through coins and stuff like that. But at the end of the day, it's about learning how to trade. That's what I'm here for. That's how we figured out the bear market. That's how we doubled the trading group, even though we dumped. And when all the other channels were going down the tubes, this channel doubled because all those other channels were based off just finding gems and whatever. 100 extra, man. Join the VIP Patreon. You know, and like they pop up everywhere. There's another VIP Patreon every single day, right? And the idea is, you know, we learn how to trade these markets, pay ourselves on a daily basis. And really, that's to me what it's all about. Shout out to the new subscriber. Thank you for subscribing to the channel. Please subscribe. Get us to 85,000 subscribers and counting on our way. Shout out to the 3,173 people here on the live. Thank you for jumping on in. Let's get the likes up to the watchers. I would greatly appreciate it. So we're watching the symmetrical triangle here on the 1 hour time frame. Let me get back to my top-down analysis here for Bitcoin. I'm in shock right now. I'm just like, what just happened? I got to make some sense of it here with my trading. So we have some support, and thank you so much for the new subscribers. We appreciate you for jumping on in. Thank you for being here, and may God bless you all. You're awesome people. We really are. And it's funny, this song is called Candles. It really is. Look, Candles. What do you know? So could the weekly come all the way back down to the 21-day moving average? There is bearish divergence. And again, maybe it gets fended off. But right now, I mean, I'll pull back somewhere to a 0.5, a 0.6 fib. And maybe to 81,000 would be possible here. And this would enable the cup and handle for another monster move to the upside. And says it would take us then till May to get there to about the $140,000. And then that could be the end of the rally. Seriously. Everybody thinks there's going to be more all the time. I don't know. You know, just be happy with what you get. I don't want to, like, you know. But this is how it usually works from all the price action I've watched in my life. It doesn't just go straight up forever. So that's on the table. That's something you have to kind of look at. I would try that yourself, print it out, whatever you got to do, write down the key levels. Now we move on to the 3-day chart, which is going to close in a couple days now. Tomorrow, actually, it closes tomorrow night. And I mean, this is beautiful, but now you got a bearish engulfing candle after you broke out of a 3-day chart. I mean, Bitcoin just strange. Like, it just broke out, man. The biggest asset in the world, people buying it all around the world. And again, that's why, you know, tomorrow this could be green and we could be ripping and you could be like, no, you were scared. No, you were scared. No, you were scared, you know. But that's a bearish engulfing candle on the 3-day chart. Every time we've seen something like that, a bit of a pullback on the 3-day. Very overbought in the stochastics RSI. Some bearish divergence there as well. And the MACD, very extended. So all of these could give us a bit of a pullback here on the 3-day chart. And that high kind of was topped out there at 108,000. I mean, we've been ripping ever since 61,000. Gone up. Dang near 80, you know, 60%. And then that brings us to the daily chart, which is, you know, for the lack of hope, you know, if you want to be on some hopium here, it's crazy as it broke out, retested. To me, this is the rising wedge. You broke out and you're retesting the top of it now. And so here's the deal. You break back inside even this little tiny bit area. You break it, you go in here, but you close a candle anywhere lower than this. I mean, I don't see how you don't go here, and then just likely you're going to head to 92,000, right? I mean, or at least to 96,350. So the bulls really, we better hope that this is what's called a bullish retest, and that this SR flip right here can hold. There seems to be a lot of resistance at 109.50. We'll call it 100, 101. 101, 150, attempting to hold, but wow, the dump just keeps happening. This is crazy. Like, usually you get a flag at one point. Like, they're not even flagging it. They're just dumping it on you. Like, there's a bit of a descending triangle. It just looks like that's just going to continue to collapse. 98,000 is the target for BTC. And Bookmap agrees. They got it to 95, but definitely all the way to 98,000. Look at that. This guy thinks he's going to get 95 now. I mean, this is a blessing for retail that didn't get in when the market ripped. So it's a good opportunity for people that weren't able to get Bitcoin. You have to just, that's how I look at it. It's a great opportunity for lower prices and high, and there's probably still some strong coins out there today, and we're going to find them. So bullish retest or a nasty dump that continues to the downside. And if you lose the 21, then you're going lower to the 50. And let's take a look. Remember, we talked about if you lost the 1 hour 200 MA, you head where? To the 2 hour 200 MA, which is right there. If you lose that, you head to the 4 hour 200 MA, which is somewhere down there at 97,300. So if you don't get a bounce sooner than later here, yikes. And look, that was a shoulder, a head, and a right shoulder. We were able to see that before it happened. Totally saw it. Shoulder, head, right shoulder. I even pointed it out, I think, this earlier today. And a little double top, couldn't get above air, and then we never got above the 200 MA on the 1 minute. I was, so close to wanting to open up a trade. I was like, let me open up a trade. Break that 200. We got so close so many times, but it didn't happen. And now we're in a symmetrical triangle, which mainly break to the downside. And so I don't see how we're not going down to 99,099. So I'm bearish on Bitcoin right now for a move further to the downside. Stop loss above 102.4. Looks like you could go all the way back down to 99,000 and take a short scalp to the downside. Something like this here for BTC. And it's just like a long. A short's a long, a long's a short. Don't get too into it. We would trade that long if we were pumping into that. That would be a bullish move. And it's a bearish move instead. Just how you look at the charts. And that target takes you further down to about $99,000 for BTC. About a $2,000 move. I would love if we get the bounce. It's almost like you've got to bounce here if you can't bounce. So Bitcoin's got to get back above 102,500 to remain even slightly bullish. That's going to be its big resistance. Then can it get above the 200 MA, and then can we reverse? Right now, you got to figure this thing's going to continue to dump on you. All right? Sad to say. Ondo will get the Bitcoin money. Ondo is getting that dough. Let's take a look at what's strong right now on CoinMarketCap. Funny, I don't know whatever happened there, but I did get my pudgy. So that's a good sign, right? Okay, usual. Up 32%. So Athena holding a buck, actually pumping. So Athena in the last 10 days up 7%, 10%, and actually pumping right now compared to Bitcoin, staying above a buck. So I bought into Athena, and it's actually been going well for me ever since I got in. Move is holding 64 too, which is pretty strong compared, because it was at 60 like yesterday, so it doesn't seem. Egan Layer, MakerDAO, and Virtual holding 270. Virtual just doesn't seem to care at all. And Ondo staying at 191 XDC. So yeah, I mean, all coins aren't bleeding out as bad as you would think. Cardano still holding, almost held $1. Beam just almost held it. Casper back, SWE, 445. SWE's pretty strong. And there's Pudgy Penguins at 3 cents. All right. Up 18% in the last 24 hours. But of course, and then Jupe back below a buck, man. Come on, man. Every time Jupe's below $1, it's like sickness for the altcoins. Every time Jupe's back above $1, it means it's go for the altcoin. It's so weird how that works. Adam back to 786. Adam, Cosmos, everything just kind of doing their thing. All right, so, if you had to trade anything, it's Virtual. Let's take a look at Virtual right now. I sold it around about 270. I mean, even Virtual looks shoulder, head, right shoulder about to come down. So I sold a bunch of, a few things yesterday, took some profits out the market. I didn't sell everything. I'm sitting in some cash, but man, we bought in pretty early. Let's take a look at Render. Render holding 7.9, dipped to 771. Went to the high of 11. They make this game hard, and I've been doing it for a long time. And they make it hard. It's not easy, my friends. Most people, it's sad, most people will not make it out. They'll leverage trade, or they'll get so depressed. And if you believe in money, if you make money your life, they will destroy you. If you love your life, if you go out, you have a dog, or I don't know, you know what I'm saying though. You go into nature, you have some type of hobby that you live for. You like to go sailing, you be outside, you like to play pickleball, whatever it is you do. If you got some other parts of your life that make you go after something other than money, then you're going to be able to survive crypto. But if it's all about money, they're going to get in your head so bad when they devastate you that it might even be hard to maintain. I'm being honest. So just be careful. And there's your dump to the downside as expected. And I see this headed down to 99,000. I don't see how we stop the pain here. All right. Grayscale's Bitcoin Mini Trust ETF tops $1 billion in net inflows. And again, this will create a frenzy for people to buy BTC, but man, lower lows here for Bitcoin. And it was kind of for me, it's a sad day. Like, it was 100K. We were going all the way up. It looked like we could hold some key levels. Now it's going to take us longer to get back up. We're going to have to fight through the pain. Not a sad day, I guess, because you can make money. A bunch of people made money short in the market, so it's still a good day. And I made massive gains yesterday, and I got out of the market too with my gains. So what am I going to say? It is what it is. All right. Yeah, I do like Sequoia. And I've been looking at Sequoia on and off for a while now. Sequoia by Virtuals. And it's holding that $19 million market cap. It's not amazing, though. But it's in a bit of this kind of falling wedge here that could break further to the upside Sequoia. And man, what a dump. And if you're on the trading group, everybody, I usually wait for Bitcoin to kind of settle tonight. Then we'll start off. But we've been through dumps like this, hundreds of them in the trading group. So have no fear. It is what it is. And it may go lower. Looks like I'll move it into my parents' basement. I know, right? The London Exchange is looking at its chops right now. You know how fast it could rip the other way? Exactly. Exactly. I got destroyed with my... Can you look at WIF? Thank you. Yeah, I would be... Well, people high leverage trade. They miss out. They don't know what they're doing. You know. WIF was hot, actually. It looked good compared to the rest of the market. It was getting very tight. It even lost the channel. WIF had a beautiful channel, even lost that. They demolished the market. They demolished the market, baby. They just demolished it. Took quick into 100K. Lost $8,000. Huh? I love you, baby. Would you say that to the club? Say it, everybody.
Bitcoin it's so large. So when it goes down 8,000, that's really not a lot. It's like, 8 cents on a dollar. It's not.
I mean, that's 8%. That's a big money. 8% is a lot for if a company lost 8% in value overnight, people would freak out. They'd be like, "What's happening?"
We're not gonna make it, and they don't hold reservations.
All right, thank you, babe. All right, everybody, I love you. I gotta jump on out of here for the day. I think Bitcoin's gonna drop below 100K today. It'll rip all the else tomorrow. Because you missed my super chat from earlier in the stream. I usually don't do super chats during FOMC. Yeah. Powell, get my talk stick. Yeah. We shout out to Master Friend. Made 3K today again. Thank you again, Sammy. God bless you, brother. See, there's always someone making gains with the lifer. How would you swing Sol? I don't know. Honestly. Thoughts on Pangolin? I think it's okay. Thoughts on Bitcoin, please. It's so funny, man. Shout out to JP. We love you. And buying alts for profit. Base it on Bitcoin valuation. Yeah. Second ask, what do you think about Bitcoin's highs? Tops trend line with 2017 high and connected looks to the high. I don't know, man. It's a little too much for me, Nick. I'd have to sit there and draw all that out. What do you think about Bitcoin high tops trend line with the 217 high and the 2020 high connected? Looks to be high. We just got stopped. I don't know. Maybe you're doing spider lines or something. Yeah. Bitcoin dropping further to the downside. And I see a dump here down to 99,000. And I almost want to say sorry, everyone, because I wish it didn't dump. I wish it could only be up only. But everybody, I love you. Thank you for this double stream today. We appreciate you. We love you. We'll be back at it later on in the live stream. I will take a break from the screens for my eyes. But I have my phone, my iPad with me. I got to take my family to dinner from like 4 to 6. But then I'll be back. God bless each and every one of you. Thank you so much for being here. Please comment, like, and subscribe. Hit the bell for notifications. You can find out when I post my next video. Remember, if you came to the channel, then you're already doing the right thing. Crypto is life. And I'll see you tomorrow bright and early, 7 a.m. in the trading group, 10 a.m. on the live stream. I love you all. Thank you. God bless. And I'll be in the trading group throughout the night. Have no fear. The lifer is here.